Now, if you've been trading the market, then you understand the importance of time frame, right? And if you're getting started in trading, in this video I'm going to be showing you the two important time frame I look out for, and with this time frame it changed the game for me in trading. What's up guys, I am ASO Forex, the liquidity king and the AUD sniper trader. Welcome back to my channel guys. This is where I document my trading journey, educate traders, and building a community every trader can relate to. In this video, the section will be divided into three, right? The first session is the session where we go on to the marker board, where I'll explain how I look at these two time frame and how it helps me interpret market data. And the second is where we'll head on to the chart and I would show you how we can combine all the information to make decision in the market. So without further ado, let's get to it. Welcome to the board guys. Now what time frame means is how price moves at different period in time, right? So we have different time frames, right? We have the 1 day, we have the 1 week, we have the 1 month time frame. So how price moves between these time frames is different, right? But for me, the two time frame I mostly focus on is the 1 week time frame and the 1 hour time frame, right? These are the two time frame I focus on. Now what I look out for the 1 week time frame, right, is understanding how the market moves during that week, right? So when I go on to the weekly time frame, I look how the candle traded for that week to determine future price movement and how I can make a decision of trading in future week to come, right? So for example, let's say you traded bullish, right, just like this to the upside. Now what it simply means that this is a full candlestick bar, right? And it means that for that week buyers were in control, right? People were buying more. There was more buying pressure than selling pressure. So what it often tells us on the chart is that there will be a possibility of price still trading towards the upside, right, giving more buying pressure, right? So that's what it means, right? And vice versa if we have for selling pressure, right? If you see a chart traded bearish candle bar like this, then it subsequently means on the 1 week time frame, right, it definitely means that there will be possibility that for subsequent week the market might continue in a bearish push to the downward side, right, because of selling pressure, right? More sellers will want to come in to the market to push price down, right? This is what I look out for the weekly chart, right? Now on the hourly chart, like the 4 hour or the 1 hour, but specifically I always use the 1 hour, right, because my entry might be in the 15 minutes, right? So on the 1 hour now, I go down to look at the structure. Are we bullish or are we bearish, or are we in a sideways market? So with the confluence of understanding how the previous candle closed for the weekly, then when I go to the hourly time frame, then I look at the market structure. Then if the market structure then aligns to what the weekly bias is telling me, then I go down to lower time frame like the 15-minute chart for entry, right, to trade in line with whatever the hourly time frame is telling me, as long as it aligns to the weekly chart, right? That is how I use the weekly chart and the hour chart. Now note this guys, context really matters, right? The specific confluences and candlestick formation also we're going to be looking at on the chart. And if you want to understand more about candlestick, the video showing above, because they have broken down the top candlestick patterns I look out for. So guys, let's get on to the chart for you to understand all I've been sharing even more better. Let's get to it guys. So welcome to the chart guys. Now for this example we're going to be using US oil, right? Now for US oil, this is the weekly chart, right? Now for the weekly chart, remember the weekly chart indicates how price traded for the week, right? So each candle here represents 1 week. That's what you need to understand, right? And this is where we understand the candle anatomy, right? So like I stated earlier, if you want to understand more about candles, you can go and watch the video where I talked about the top candlestick I trade with. So this point is best for this case, right? Now if we were looking at the price at this zone right here, so we could see that the candle closed bearish, right? We had the week trade which traded up to this point and closed down at this point, right, showing that candlestick or the bearish momentum, right? So if we had this for the previous week, we can clearly tell that the week would be bearish, right? Just as it happened, just like this, right? Understand that it has played out, but this is how we backtest, right? So we'll just use this as a backtesting scenario, right? So as you can see, the candle traded closed bearish. We can see the bearish bar right there, indicating that this candle was indeed bearish, right? So if we get this, what we want to do now is to go down to lower time frame, right, which is either the 4-hour but the 1-hour, right? Now on the 1-hour, what are we looking for is the current market structure. What is the current market structure? We can clearly see that the current market structure is bearish, right? We have a push, a correction, an impulsive, a correction, and this was where the new week started, right? This point. So if we have this in mind, what we want to do now is simple. We want to look at how we can take an entry at this zone. So the possible way would be for a break, right? Because if we consider this as our low, right, we want to either see price break the low just as it did, right? When we see price break the low, then what we want to do, we want to wait for a retest, right, around that zone using a break and retest strategy, right? And knowing the weekly time frame closed bearish, right? So for the week, we want to be looking for sales. And as you can see, when price traded to that zone, right, you can see it gave a tweezer, right? A tweezer, which is a confirmation to short, right? So if we had a tweezer, then we can short after the form of the tweezer. Our stop loss will be above the high of the tweezer, and we target a 1:2 gigs to the word, right? And you can see how just understanding the weekly bias and as it aligns to the hourly charts, then we can find a clear entry trading to the downward side, right? And as well, if it's just break and retest we're looking for, then we'll have another entry here again, right, following the break and retest towards the downside, right? And let's look for other examples, like let's take a different chart at all. Let's take gold. So on the weekly chart, we want to look at how price traded, right? Now if we had this candle right here as a weekly candle, right, that price closed bearish, as you can see, it indicates that the pressure is bearish regardless of the week, right? The week overall showed that the candle buyers had to push the price to close here, right? But still we are bearish on this candle. So what happens is we go down to lower time frame, right, and see how we can look for entries, right? So let's go on to the 1 hour and see the current market structure. So the current market structure is bearish, right? The current market structure is bearish. As you can see, market is creating an impulsive, a correction, an impulsive, correction, impulsive, and correction. Now if we are looking for trades around this zone, what we'll simply want to do now is to look at the confluence. What are the confluences? Candlestick confirmation, which is very important, and break and retest, right? We want to see price break a zone and retest it, right? And for this, we have an impulsive from here to this zone, and we have a correction, right, towards the upside. Now, what do we simply want to do? We want to look at how price is traded around here, because we would want to catch the impulsive move, right? And with this said, I can clearly see a break and retest, right, around that zone. So we have a zone, right? After price took out the support zone, you can see the push towards the downside and the break, and you can see it retested it. So the candlestick confirmation wasn't clear there. It ranged for a while before pushing up, but if you're smart, then this will be your confirmation right here. The close of this candle would be your confirmation. This is how you can use higher time frame as confluence in line with lower time frame to take a trade, right? Now, these are the things you need to look out for, guys. Number one thing you need to look out for, which is very important, is the 1 week time frame. The 1 week time frame tells you how the week ended and how you can forecast the previous week, right? Then once you get the candlestick anatomy, then you go down to lower time frame like the 1 hour, right? The 1 hour is to get your trend and trade in line with the trend, as long as it aligns to what the weekly time frame is telling you, right? And the confluences you can use, you can either use a break and retest, right, strategy. You can also use a candlestick strategy as well. So guys, what I would suggest is you watch this video multiple times to get a better understanding of all I just shared in this video, right? And also, it's important that you backtest all information that has been shared in this video, right? And also forward test them, right? Also, down in the description, you'll see the link to join my Telegram community, where you can directly reach me. And there I also share trade analysis, market insight, and information that can take your trading journey to the next level. Follow me on all social media. The link is same in the description box, and also in the description you will see the broker I trade with, and I recommend my community trading with them as well. I am Aso Forex, the liquidity king, and the AUD/USD sniper trader, and I'll most definitely see you in the next video. For now, I'm out.